Hey, what's up, my friend? Welcome back to this week's market analysis, right? So, since, right, this week is the first week of October, right, I'm doing my monthly special, right? So what's going to happen is that I will look across the different sectors in the financial markets and, give you an insight into what's going on. We cover the forex markets, commodity, bonds, indices, and much more. So this is I would say the theme, right, of today's video. Plus, right, I am going to also cover about a particular candlestick pattern, right, the pinbar, and how it actually caused destruction, right, to so many traders, right? So all this and more in today's video. I'll see you there. Okay, so the first market we are looking at is the euro dollar. So euro dollar, as you can tell, right, is clearly still in an uptrend, right? But just to let you know, I actually, this market has hit my trailing stop loss and I got out of this trade already, this long trade. But nonetheless, the trend is still intact. If you just, pull up the 200 MA, right, the price is still way above it. Okay, so if you ask me, right, I would say the next level where buyers could potentially come in is at this area of support over here. So possibly you could see we have this mini head and shoulders pattern that actually broke down, right? I said that, last week I said we should always, look at what is the long-term trend. But in this case, this mini head and shoulders pattern did play out. It broke down, slight retracement, and my guess is that price would come down lower another step into this area of support and, possibly give you a bullish price rejection and, close higher. If that's the case, then that could be a possibility for you to look for a long setup. But in the long term, right, in terms of looking at this daily time frame, right, the euro dollar still bullish on it. The pound dollar, on the other hand, is bullish as well, right? You can see that this market, right, broke above this area of resistance. It broke out and then it pulled back, right? So possible levels where it could pull back into is this 132 level, this one over here. And the thing about pullback is that you have to be aware that sometimes the market, I think what's misleading is that a lot of times traders think that the market have to behave the way it's supposed to behave. Like for example, this is the it breaks down, it has to come back to this point, right, retest and then continue trading lower. But in reality, right, what it usually does is that there are a few scenarios that could play out, right? This is the previous support turn resistance. It could come back but not deep enough and then it continue selling off. It could then also come back and push even deeper than where it should, right, and then sell off. Or you could come back, touch the tip, and then sell off. So you want to be aware of all these three potential scenarios. So what you're looking at is this pound dollar right now, right? And you want to envision that this market may not get to this level and then reverse. It may get to this level and reverse. It may get into this level, retrace deeper, and then reverse. Or it may just, retrace altogether. So this is why, risk management is so important. And, to always have, different plan of attack, right, should the market doesn't come to the exact level that you're looking for. So I think this is an important point to make out. Aussie dollar, another one, right? Okay, so this one, right, price has now come into this area of support, right? It's quite a good area of support, right? 1, 2, and then the third one over here. So what I'm looking for, right, I didn't go long on this bullish pin bar, right? Because if you look at this, right, there's nothing bullish about it. I mean, true, right, the candlestick has closed higher, but it does not mean that in terms of market structure, the buyers are in control. If you go down to the 4-hour time frame, right, where the bullish pin bar form is at this point over here. Okay, so if you look at this, at this point, on a 4-hour time frame, do you want to go long? Well, if you ask me honestly, I have no interest to go long because it doesn't tell me that the bulls are in control. Right? It's just telling me that this could possibly be a retracement against this downtrend on the 4-hour time frame. So what happened is that the market now has continued trading lower. So what I'm looking for is for signs that this market on this 4-hour time frame that the bulls are taking back control. So perhaps, right, price could rally back here, come down lower, rally back once again, and at this point you have an area of resistance. And if it does break and close above this area of resistance, this would tell me that the buyers are back in control and I'll look to get long. So do be careful of, memorizing candlestick pattern and trading them off blindly off, these support resistance areas. Because more often than not, if you look at these candlestick patterns, the pin bar engulfing, right, if you go down to, let's say, the 4-hour time frame, they are just usually retracement on this time frame. And I believe I've covered this quite a bit in one of my pinbar videos, right, that you can find on YouTube. Okay, so New Zealand dollar, right, this market pretty chopped, right, at this point in time, pretty much in the range between here and here, right? So this market is pretty much in the middle of nowhere, and you know, for those of you who have been following me for a while now, you know that I don't like to take trades when, you know, when the price is in the middle of nowhere. Okay, because your stops have to, you know, be leaning against the structure, and this is the nearest structure that I see, and it's pretty wide, right, if you want to lean against this structure. So a better trade from a risk to reward standpoint is to let the market come as close as possible to the structure of the market, and then you can have a tighter stop loss. Dollar Canadian, right, another one, right, let me share this with you, right? So if you look at this, right, a lot of traders will look at this, boom, right, previous support, turn resistance, okay? And they see this pattern, right? Maybe they call is it the dark cloud cover? I'm not sure what's the exact term, right? And they go short. But again, the size of the candlestick matters, because if you just get an average or small looking one, right, and you go down to the 4 hour time frame, what you're gonna get is this. You can see that at this point in time, does this look, right? Does this look, right, that the market wants to reverse lower? If you ask me, right, it looks like at this point in time, this market has just had a retracement and another step higher. Okay, so be aware of you know, the candlestick patterns that you're trading, because often, right, on the lower time frame, you're simply, you know, going against the trend, and there is really nothing to signify that, you know, the trend is about to reverse towards the downside. So similarly for this trade, what I'm looking for is perhaps another step lower, price rallies, comes back down, and finally break down. At this point, it would be clearer to you that the sellers are in control when you have a lower highs and lower low. Okay, so this is important, right? At this point in time, there is no lower highs or lower lows. Sorry, yeah, there is no lower highs or lower lows. It's just, you know, higher lows and higher highs. Okay, so just very basic market structure, and if you just follow this, right, honestly, you don't really need to memorize any candlestick patterns, right? It's all the message is in the market structure in itself. The last currency pair we'll look at is the dollar yen. Okay, so you can see that this market pretty much still in the range between the 114.50 level and the 108 level. Again, price is in the middle of nowhere, and I just have no interest trading when the market is in the middle of nowhere, right? So I think this is a good example of the pullback, right? Price broke out. So a lot of times traders are looking at this area, right, for the market to pull back into. But what happens is that the pullback isn't deep enough before it continue rallying higher. So a very important thing for you to think about is, you know, what if, you know, the market does this? How will you get on board the trade? Or will you just, you know, skip the trade altogether? Right, now that's something to really think about. Moving on, let's have a look at crude oil. So crude oil, this one, right, we have a breakout actually out of this 56 level. So price is now retracing. So obviously this is a level, this previous resistance turn support is a level that many traders are looking, right? Same thing applies. The price could reverse before it. The price could come into this level and then reverse, or the price could come in deeper into this level and then reverse. Okay, so again, right, one way to, you know, to sort of, you know, time your entry on crude oil is you can use the 4 hour time frame. I find that the daily and 4 hour is a pretty good combination. Let it come down. Okay, and you know, perhaps it can give you a bullish chart pattern, right? Perhaps you know, an inverse head and shoulders pattern like this before it finally breaks out. Maybe a triple bottom and stuff like that. Okay, or what you have is maybe say a very huge bullish, you know, pin bar or engulfing pattern where it comes down lower and it close bullishly higher. That would be another signal for you to get long, right? But always, right, you want to take it in context of the market, right? Do not just trade this candlestick blindly. Okay, so that is for oil, bullish as well. Let's see. Let's have a look at the index, shall we? So S&P. All right. So if you have been following this monthly, you know, review, you know that I'm bullish on the equities for, you know, for quite a while now, right? Because there is no reason for you to be bearish on it. You just pull out your 200 period moving average. The price is way above it for, you know, quite a while, since December last year. Higher highs, higher lows, nothing to doubt, right? And if you ask me, the strongest among all the indices is none other than the Russell 2000, right? We had this breakout of this highs, right? A very strong bullish close above here, and this is the Russell 2000 looking bullish. I mean, I would say it's the most bullish among all the other indices. But generally, most indices are all, you know, they are bullish, right? Just depending, you know, which country you're looking at, which continent, and their degree of bullishness would vary. I would say one of the poorer performing one is the ASX, right? It's basically chopping, and more chop since May this year. So, this is a market that clearly, if you want to long, go for the stronger indices out there. And the last sector we'll look at is the bond markets, right? Let's have a look at the 10-year and the 5-year. So the bond markets generally, it's pretty much in a downtrend. Pretty much in a range. Okay, but if you look at the shorter term bonds, right, they are pretty much heading into a downtrend. So meaning that the bond prices are falling as yields are increasing, right? So this is the 10-year. If you look at the 5-year, the market has actually broke down below this area of support, right? You can look to go short, right? If you are the type of trader that trade breakouts, right? So the 5-year has already break this area of support. And if you look at the 2-year, right, it's even worse, right? It's pretty much in a downtrend. So you can see that shorter term bonds, right, the trend is leaning towards the downside, right? And the reason for this is that I would say expectations of interest rate is about to rise in the near term, right? So this kind of explain the bonds price action. All right, so yep, that's all I have for you in this week's market analysis. We have basically covered the different sectors out there, right? So we talk about the FX, right? So a quick recap is that euro dollar, the pound dollar, generally, right, the US dollars, the trend is still towards the downside. Okay, so this means that bullish on euro dollar, bullish on the pound dollar, Aussie dollar around that area of support as well. New Zealand dollar pretty chop, dollar yen in a range, and the dollar Canadian we spoke about is the entry trigger at the time is just not right to short yet. So this is generally what's going on in the FX markets. Then we spoke about oil, right? Oil is bullish as well, breaking out of resistance. We spoke about the indices, right? Let's call it index, right? Bullish as well. And bonds, somewhat bearish for the shorter term duration bonds. Okay, and I guess the additional thing that I've mentioned is to be aware of, candlestick. Right? Don't take them in isolation. Don't trade them in isolation, right? You always want to look at what the market structure is telling you. I would say market structure is more important than any individual candlestick pattern out there. Okay, so that was another thing that we covered quite a bit in today's video. So with that said, right, I have, come to the end of today's video. If you have any feedback, comment, just leave it below, right? Any questions, and I will get back to you. And if you enjoyed today's video, right, please hit the subscribe button and the like button, and I would really appreciate it. So with that, I wish you good luck and good trading. Talk to you soon.